Welcome to the 2024 Economic Preparation and Depression Channel. I'm your host, Tony. Thank you for joining me on this weekday edition. Today, we're going to be talking about three things shortly here. Credit card borrowing drops unexpectedly in April for the first monthly decline in 3 years. So that's good news. This is according to MarketWatch.com report. As of June 7th, total consumer credit rose to $6.4 billion in April. And so, what's good news is that people are still spending on essentials and, non-essentials, are still living life and enjoying themselves, which is great news. And, we shied away from, according to numbers here, consumers shied away from using credit cards according to the latest government data released last week. Total consumer credit rose though. So, credit is still rising, obviously, but the U.S. economy and other economies are based on a credit debit relationship. And so, most people, say they pay it back at the end of the month and all that kind of stuff. So that's really, really good. That's good news for this economy is that, overall debt is lowering, and people are actually, saving and spending on essentials and, just spending it when they need it, when they take a trip or something like that, or some kind of family emergency or stuff like that. So that's great news for this economy. It's that credit card borrowing, according to the article, according to the media, is dropping. So now this Nvidia thing, I want to ask you guys, are you really getting into this Nvidia FOMO, fear of missing out? First it was GameStop and, AMC and Tesla. And then when they went down, now people found the next unicorn stock, which is the Nvidia stock. I don't know too much about it, honest with you. I know stocks go up and down. But a lot of billionaires are leaving Nvidia stock and buying two magnificent index funds instead. This according to the Motley Fool report here. So wealthy managers sold shares of Nvidia in the first quarter and reinvested capital across the Invesco QQQ Trust and the iShares Bitcoin Trust. So now they're moving their money to this type of thing here. This tracks the NASDAQ 100, a growth index a growth-focused index that returned 171% over the last 5 years. So that's a great return there. And the Bitcoin Trust tracks the price of Bitcoin, is a cryptocurrency that's returned over 635% over the last 5 years. So this tells me that the big mega billionaires are looking for a more of a short-term return on their money, whereas before some of the billionaires, they were looking for like they were playing the long game with these stocks, and only selling when necessary to get into cash, like what Warren Buffett did. He's sitting on a bunch of $100 billion of cash reserves, waiting for everything to come in so he can swoop up everything. But other billionaires are selling their stocks and getting into index funds. These two index funds, according to this article now, Motley Fool, they're selling these stocks and getting to these because they were providing returns over the last 5 years that are just phenomenal. And so I think Nvidia is running about $130 last time I checked, the stock price of that. So, hey, whatever you want to do. But, that's two strategies that you could use here. You could follow the path of these people that have made this money over so long period of time and just get in for short term, get your money and get out. And that's actually a good thing for a lot of us regular people is, kind of get your money, know when to hold, know when to fold, know when to get out. That's the key thing. Know when to hold and know when to fold. I'm not a financial planner. I'm not a financial advisor, but that's what I've learned is to know when to hold and know when to fold, especially when we're dealing with this, because the things, the two truisms is that, nothing goes up forever and nothing comes down, stays down forever. Okay. So that's two things you need to know. So the 10 largest holdings that they had here and the Invesco QQQ Trust is Apple, Microsoft, of course, Nvidia, Broadcom, Alphabet, Amazon, Meta, Costco, Tesla, Netflix. So they have a broad range of stocks here that include the Magnificent Seven that everybody's raving about, as well as other things like Costco and Netflix and stuff like that. So that's what they have here. Now, Bitcoin Trust is a cryptocurrency index fund, and apparently that's going up. I don't know too much about crypto. Like I said, I've heard of Bitcoin. I've, dabbled in it a little bit, but I'm not a Bitcoin expert or guy. But this is what the two funds that Motley Fool said they're invested in. And so now we have consumers that say that they're pulling back on tipping servers, drivers, and hairstyles. Everywhere you go, there's these electronic machines, according to NBC, that telling you got to tip these people. Even when you go to the self-checkout line at the grocery store, you've noticed they're asking for a tip now at Walmarts and places like that. What do you think? Are you going to tip these consumers? Are you going to tip people when they're not doing great service, or just give them automatic 10% tip? Especially now that minimum wage in some of these states have gone up to $20, $25 an hour. hour. Although some will argue you would need that as a living wage is really at $30 an hour, that you would need that to survive these rents and mortgage prices that we have now in all 50 states. But are you a big tipper? Let me know. The share of adults who say they always tip for common services has fallen since 2001. So people are skipping the tip. At the coffee shop barista, taxi ride drivers, food delivery people, grocery delivery people like Instacarts, hairstylists, barbers. I don't know. It used to be you were getting great service and everything. I would tip for great service, yes, no doubt. You know what I'm saying? But if it's mandatory, some of these restaurants, they already put a 15%, or hotels already put a 15% gratuity included in your bill anyway. But I'm saying I would tip generally for great service above and beyond, or if it was something that, the people made your day in terms of the attitude, they were up, ready to go. And like I just said, look here, the article just mentioned it. At least 25 states have raised or will raise the minimum wage this year, including several major cities like New York and Chicago. Listen to that. Including mandating a full minimum wage. California's new $20 minimum wage for workers at big fast food chains took effect in April. So they're already feeling the effects. And they're just going to pass those effects on to us, you and I. So I'll stop eating out as much anyway. So because I don't eat out maybe once or twice a week, if that at all, okay? Because of the prices so high. Every time you go for 2 or 3 people, it's $30, $40, $50 at some of these places, even fast food. So, I don't have a problem with tipping, but I realize that, ladies and gentlemen, that this is going to be a very controversial thing, because when they raise the rates, as you know, businesses have to raise their input cost raise, and it just gets too much. How much is going to be enough for somebody, to live and to keep ahead of inflation and to keep ahead of the cost of living. You're chasing a carrot on a string, basically, and that's what I'm trying to say. So anyway, let me know what you think in the comments, ladies and gentlemen. Thank you for listening. God bless. I'll talk to you in the next episode.